All right, welcome back, fail-safe investors, to another edition to Battle of the Brands at the end of the week. So today we're doing another stock analysis of another company, or should I say a competitor to the company that I analyzed a couple of days ago, which was Uber. And so the only competitor that I can think of for Uber would be, I guess, Lyft, because if you're not getting an Uber, you're not getting a Lyft, and you're getting a taxi. And taxis aren't really considered a public company. So we're going to look into Lyft, a company that you can invest in, and that's a competitor to Uber. So let's get into it. Let's go. Lyft is a relatively simple company to understand, but if you look at their 10K, the way that they describe themselves, you would think they were selling diamonds to support underprivileged children in third world countries. Now, if you don't believe me, take a second and see or look into the 10K yourselves. I'll post a picture for you to look at and read through it yourself. You can just read a paragraph or two and you'll understand exactly what I'm saying. Now, you have to look out for companies like this because if it looks too good to be true, or if they look like they're trying to sell their company or upsell their company, then that's not a good look for them. This is Uber's 10K. Do you see a difference? I'll wait. So Lyft really only operates in a couple segments. They have the ride sharing service, they have bike and scooter rentals, but that's only in 9 metropolitan areas, San Francisco, Boston, Chicago, and a couple other areas. They only operate in Canada and the United States. That's it. And I think the only city that they're operating out of in Canada right now is Toronto. And they have Lyft rentals also. So if you want to work for Lyft and you don't have a vehicle, you can use Lyft rentals as long as you pass the background checks and a lot of things like that. Or if you want to get a rental for the weekend or something like that, they have Lyft rentals. Okay, so Lyft also has a partnership with a company called Aptiv, where they're like trying to develop autonomous driving, the same thing how Uber is trying to do, only the difference is Uber owns the company that's doing their autonomous driving research, and Lyft is pretty much outsourcing theirs. But that's not bad because Lyft kind of got a jump on Uber because they've already had over, or they say that they've had over 100,000 autonomous drives or tests in Las Vegas with like a safe driver in the car or something like that. So I guess. But other than that, Lyft doesn't have any of the services that they deliver on or services that they have in general. So I don't understand why they need to describe themselves with more than enough detail in their 10K, or over describe themselves or make themselves look like they're doing something that they're not. This is what they wrote in their 10K. We aim to build the defining brand of our generation. We believe that our brand represents freedom at your fingertips. Freedom from the stress of driving and car ownership, and freedom to do and see more. Our unique values and culture are reflected in our brand. We drive awareness of our brand through our marketing efforts, which highlight our offerings, the simplicity of our user experience, and our commitment to community. And we also benefit from the evangelism by our users. Right. Other than Uber, there is another ride sharing service that just popped up in Chicago called VIA. VIA. They're not too big right now, and they might get consolidated to one of these two companies, but pretty much it's just Uber and Lyft right now. And the way that Lyft kind of operates, I'm not saying it's a bad company, it's just I would be very careful with them. But they are all about their brand. I will give them that. They do background checks, they pay their employees a little bit more than Uber. So they are all about the brand and all about society. It's just the way that they describe themselves worries me just a little bit. And they don't have any scandals. Their CEO doesn't have anything bad on him. It's just he's not the CEO of Uber. Now, I'm a little bit biased because I do own Uber stocks, but that's just neither here nor there. So without holding you up, let's get into the numbers. Okay, so Lyft. Ticker symbol LYFT has a market cap of 9.6 billion and is selling around $30 a share right now. So it's considered a small cap market cap. They lost about $6.30 per share last year, so that's negative $6.30 per share. So they don't have a price to earnings. Like I've already said, you need the earnings per share to have a price to earnings, and they don't have a dividend right now. And if you think that Uber lost a lot of money last year on our earnings per share, which was like $6.13 per share, take a look at Lyft. It gets ugly very quickly. But that's just a brief overview of the company. Now let's get into the nitty gritty stuff, the financial statements. So when we look at Lyft's balance sheet, like I've already said, this is a small company, so they have a lot of room to grow. They have a lot of potential to grow. It's just up to them and how they handle their business, if they're gonna grow, if not. And their business right now is depending on people using their app. And in times like this, I doubt a lot of people are using their app, but let's just get right into it. So in 2019, Lyft made about $3.6 billion in revenue. They have about $2.8 billion in cash and short-term investments, and they have, if I can remember, $3.2 billion in current assets versus $2.4 billion in current liabilities and debt. So that's not bad, but it's cutting it a little bit close if you ask me. Their debt and liabilities is more than 50% of their current assets. So they can liquidate, they can pay off all their current debt. Like I said, this isn't a really big company. And over the years, they have grown. In 2017, they were making like $1.1 billion in revenue, and then in 2019, they're like $3.6 billion in revenue. So they are growing, and they will continue to grow at the size they are. They are still relatively new in the game, unless Uber just pretty much takes over. I don't think Lyft is going anywhere anytime soon. I think the government will help Lyft stay in the business just so that Uber doesn't have a monopoly on the game right now. So, like I've already mentioned, Lyft made $3.6 billion in revenue, and I've already mentioned that in their earnings per share, they lost $6.30 per share. So their net income is going to be in the negative also. So it is negative $2.6 billion. So that's how much money they lost last year. That equaled up to that $6.30 per share. Yeah. So let's go to the cash flow statement. So looking at the cash flow statement, they're not going to have any free cash flow. They're not going to pretty much make no profits. They're operating at a loss right now. But I will say that they have about $178 million in capital expenditures from 2019, so that's not bad. When you're trying to expand a company, you're not spending billions of dollars in capital expenditures. So they can spend $178 million and still expand the company. But I think their biggest loss is they're trying to compete with Uber by like offering incentives, offering to pay their drivers more money than Uber. And it's a lot of ways. That's pretty much where they're taking the big losses on. And Uber, it works the same thing with Uber. Like Uber has to offer their drivers incentives to use their app and people credits and all that stuff. So it works both ways, but Uber is so global and diverse. They have other streams of income that they can go and offer a low price all day and still make a profit at the end of the day. But Lyft, since this is your only business, this is your main business, you really can't go to war with Uber on that front right there. You don't, I'm just gonna be honest, you just don't have the money to do it. So, like I always say, do your own research. I am not a financial advisor. This is just my take on this company. This is how I feel about this company. In a couple of days, I'll probably do a battle of the brands where I pretty much pin these two brands against each other, see which one come out on top, ask the questions of the growth, sustainability, and value, like which one would come out on top in those three categories, and we'll see. So till then, let's do it. Hit that subscribe button, hit the like button. Let's go.